Without objection, the chair is authorized to declare a recess of the subcommittee at any time. Without objection, members of the full committee not on this subcommittee are authorized to participate in today's hearing. Members are reminded to keep their video function on at all times, even when they are not recognized by the chair. Members are also reminded that they are responsible for muting and unmuting themselves and to mute themselves after they are finished speaking. Consistent with the regulations accompanying HRES 965, staff will only mute members and witnesses as appropriate when not recognized to avoid inadvertent background noise. Members are reminded that all House rules relating to order and decorum apply to this remote hearing. This hearing is entitled Access Denied, Challenges for Women and Minority-Owned Businesses Accessing Capital and Financial Services During the Pandemic. I now recognize myself to give an opening statement. Good afternoon. Small businesses are critical to the United States economic growth. They contribute 65% of all new jobs, and they are a critical tool for wealth creation and increasing employment. But minority and women-owned businesses face numerous unique and disparate barriers to market entry. We must act to eliminate the systemic and racial barriers that impede the formation and competitiveness of minority and women-owned businesses. These barriers face an uneven playing field when it comes to accessing capital, leveraging loans, and other credit products necessary to fund and sustain their business. In today's hearing, we will discuss how easing impediments on African American access to capital will result in economic and employment growth in minority communities and in the United States overall, and examine the historical and systemic challenges faced by minority and women-owned businesses, such as a lack of access to capital and systemic racism, and how those persistent challenges have led to their closure at a disproportionate rate during COVID-19 pandemic. In small businesses experience a 22% closure rate as the result of COVID-19 pandemic from February to April of 2020. But the closure rate for minority-owned businesses are significantly higher, with 41% of Black-owned businesses, 32% of Latinx-owned businesses, and 20% of Asian-owned businesses closed over the same period. Now, in April of this year, the Federal Reserve Bank of New York reported that minority and women-owned businesses are significantly more likely to show signs of limited financial health and are twice as likely to be classified as at risk or distressed than non-minority small businesses. Further, distressed companies are 3 times likely as healthy business to close because of a 2-month revenue shock. The PPP program, established under the CARES Act and administered by the Small Business Administration and Treasury as funding lifelines for distressed businesses responding to the COVID-19 pandemic. But recent analysis by the Color of Change in the United States found that only 1 in 10 African American and Latinx-owned businesses received the requested funds through the program. I have heard from many minority-owned businesses who did everything right, yet they did not get a loan number or a loan in the first round. Many minority businesses shared that the Enhancement Act was not adequately designed to enhance or assist small businesses. Thanks to the partnership of the Financial Services Chairwoman Maxine Waters and Small Business Chair Nydia Velasquez, adjustments were made in the second round of funding. On June 30th, the Small Business Administration announced that $4.9 million loans totaling $521 billion have been granted by the PPP. So now let me just say, I look forward to hearing from our distinguished witnesses who share key insights regarding the ongoing plight of minority and women-owned businesses and what steps the Congress and the private sector can take to ensure necessary and fair inclusion in the economy. The chair now recognizes the ranking member, my good friend, colleague, and someone who I'm delighted to see, although it's on Zoom today, ranking member Congresswoman Ann Wagner.
I thank you, Madam Chairwoman, and it's a delight to see you and all of our committee here this afternoon. And thank you for holding this hearing. I want to welcome and then thank our witnesses for testifying about the obstacles that women and minority-owned businesses face when it comes to accessing capital and financial services. When this pandemic began and businesses were forced to close their doors in order to prevent the spread of the coronavirus, Congress took swift action to stabilize the economy, keep Americans employed, and businesses from closing, and give our healthcare workers the resources that they need to combat the disease. Those actions included providing regulatory relief to lenders and access to emergency programs through the Federal Reserve and the Small Business Administration. I want to highlight a few specific solutions that Congress has provided during this pandemic to ensure U.S. businesses continue to have access to the relief they need. We've lowered the community bank leverage ratio to give community banks the ability to continue lending as cash deposits have increased. We've given flexibility to banks that would have been required to comply with the current expected credit loss or CECL accounting standards that would have locked up billions of dollars for financial institutions and hindered their ability to lend to those who need assistance the most. Finally, we authorized some $660 billion in forgivable loans under the Paycheck Protection Program, which has supported more than 51 million American jobs and over 80% of all small business employees. The program included a set-aside amount of $10 billion for community financial institutions. When it comes to ensuring that women and minority-owned businesses can access PPP loans and other funding, I'm glad to see that some lenders have taken the initiative. Lenders such as Citigroup, JP Morgan Chase, and the Bank of America have provided data highlighting their work to ensure that PPP is available to a diverse group of customers. For example, JP Morgan set up a new program to focus on underserved entrepreneurs, and the Bank of America is conducting extensive outreach to small business clients in low and moderate income neighborhoods to raise awareness about PPP and other loan facilities. But it is not just our nation's biggest banks that are helping those in need. Let me tell you about what happened in St. Louis last month with a banker from Midwest Bank Center. He was getting his hair cut when he overheard that the African American woman barbershop owner had taken out a $5,000 payday loan to pay bills. The banker offered to assist her in applying for PPP loans. That interaction eventually led, most importantly, to the bank signing a deal with the National Minority Supplier Development Council, a group which helps minority-owned businesses access PPP loans. I commend these professionals for their outreach, and I urge other firms in the industry to follow suit if they have not done so already. I've also introduced the Calculate PPP Forgiveness Act with my friend and colleague from Missouri, Congressman Lacey Clay, which instructs SBA and Treasury to create or certify a loan forgiveness calculator to resolve confusion between lenders and small businesses over what costs should be calculated and help small businesses populate their forgiveness forms. This bill has the support of the U.S. Black Chambers, Heartland St. Louis Black Chamber of Commerce, the NFIB, ICBA, the Missouri Bankers Association, and so many, many others. It is especially important for businesses that don't have the resources to hire outside consultants to help them with the forgiveness process. While this hearing is about access to the capital during the pandemic, this subcommittee must also focus on permanent regulatory reforms to lift and strengthen minority and women-owned businesses beyond the pandemic. These businesses benefit when we cut unnecessary costs and expand opportunities for investors to put their money to work. I thank you, Madam Chairwoman, and I yield back.
Thank you. The chair now recognizes the chair of the full committee, Chairwoman Maxine Waters. It is indeed an honor for me to introduce someone who really needs no introduction. She is an advocate for the people, and as we talk about the PPP plan today and other financial service issues, please know that her fingerprint, her footprints are all over it, and she has been recognized for her great leadership. No further words. Chairwoman Maxine Waters from the great state of California. I recognize you for 1 minute or as much time as you might take.
Oh my goodness. Well, I want to thank you so much, Chair Beatty, for all of the work that you're doing to really get the whole discussion of inclusion and diversity in the national eyesight. You're doing a wonderful job, and I thank you for convening this important hearing on the struggles that women and minority-owned businesses face accessing capital. Before COVID-19 crisis began, as you have said, minority and women-owned businesses had serious challenges in accessing capital. For example, 2018 data showed that minority business owners were less likely to be approved for loans or were approved for lower loan amounts and higher interest rates than their white counterparts. Forbes also reported that when women and minority-owned business owners apply for loans, they're often rejected due to a lack of assets caused by the widening racial and gender wealth gap. Despite these challenges, women and minority-owned businesses have grown 10 times faster than all other U.S. small businesses. However, we will never close the racial and gender gap and provide for expanded entrepreneurship opportunities for women and people of color until we can address these capital challenges. So I'm very pleased to be here with you today, and I look forward to hearing from our witnesses. I thank our witnesses for being here, and I'm looking forward to hearing their views on how to help solve this challenge. Thank you, Chairwoman Beatty, and I yield back the balance of my time.
And thank you, Madam Chairwoman. Today, I too am honored to welcome the testimony of our 4 witnesses. Mr. Ron Busby Sr., President and CEO of the United States Black Chamber of Commerce. Ron is a former CEO and serves on the Pfizer Small Business Council and White House African American Leadership Council. Our next witness is Carmen Castillo, Chairwoman of the Board of Directors of the United States Hispanic Chamber of Commerce. Carmen is also the President and CEO of SDI International Corp., which she founded in 1992. Our third witness is Kerrigan, President and CEO of the Small Business and Entrepreneurship Council. Karen has been appointed to numerous federal advisory boards, including the National Women's Business Council, the U.S.-Iraq Business Dialogue, and the United States Treasurer's Taxpayer Advisory Panel. Our final witness is Jenell Ross, President of Bob Ross Automotive Group. She is the only second-generation African-American woman dealer in the country. Jenell also serves as the chair of the board of directors for the Cincinnati branch of the Federal Reserve Bank of Cleveland. Witnesses, you are reminded that your oral testimony will be limited to 5 minutes. A chime will go off at the end of your time, and I ask that you respect the members and other witnesses' time by wrapping up your oral testimony. Without objection, your written statement will be made part of the record. Ron, you are now recognized for 5 minutes to give oral presentation on your testimony. Thank you.
Thank you, Chairwoman Beatty. Ranking Member Wagner, and Chairwoman Maxine Waters, and distinguished members of the subcommittee for the opportunity to share testimony with you today. Again, my name is Ron Busby, and I serve as the President and CEO of the U.S. Black Chambers Incorporated, the nation's leading voice for Black businesses across the country. We represent 145 chambers in 42 states with a membership base of over 332,000 Black-owned businesses, founded on our 5 pillars, which are advocacy, access to capital, contracting opportunities, entrepreneurial training, and chamber development. The U.S. Black Chamber, better known as the USBC, for the past decade has been providing committed visionary leadership and advocacy in the realization of economic empowerment. Through the creation and resources of initiatives, we support African American chambers of commerce and business organizations in their work of developing and growing Black businesses. Clearly, minority and women-owned business enterprises, MWBEs, are critical components of the nation's vast economy. These firms collectively provide upwards of $1 trillion in annual receipts and contribute nearly 9 million jobs to the country's labor market. MWBEs have been cited as the fastest growing segment of businesses, in results creating 40% of America's new jobs in recent decades. Despite this extraordinary impact, it is Black business owners and entrepreneurs that history and data shows face systemic barriers to entrepreneurial resources and access to capital, among other daunting challenges. In light of these facts, we believe that strategically engineered policy can put a stop to continuing disparity experienced by Black-owned businesses. Our participation in today's virtual hearing underscores the critical role of continued advocacy to the establishment of public policy that addresses continuing challenges in accessing capital and financial services. Amidst the ongoing health and economic crisis, the most prevalent disparities exist within Black America. Case in point, the country lost 3.3 million small businesses in the first and second quarter of the year, but the number of Black entrepreneurs declined 41%. Nearly 450,000 Black-owned businesses were closed between the months of February and April. In addition to this disproportionate decline, Black America suffered the brunt of the labor loss during the pandemic. The Black unemployment rate peaked nearly 17% last month. Despite the number of Black-owned businesses located in the nation's fastest growing markets, these enterprises faced economic derailment and revenue loss prior to the pandemic, in part because Black firms are overwhelmingly represented among the high-impact industries, and in part because they were already in weaker financial positions. The pandemic simply exacerbated the challenge. Even though congressional action resulted in nearly $700 billion in relief aid to small businesses through the Payroll Protection Program, this week's SBA and Treasury records show that the case of structural discrimination against Black business owners remains prevalent. In the program's more than 650,000 PPP loans made above $150,000, only 143 Black firms received a loan of that size. 90% of the members of the U.S. Black Chamber have reported that they found far less of what they asked for or none at all. Fortunately, we here at the U.S. Black Chambers are working to address these disparities by creating resources and funding that bridges the gaps in effective federal policy. To jumpstart recovery, our organization recently launched a transformative initiative entitled the Buy Black Platform, which focuses on supporting the millions of Black businesses by providing grassroots assistance to the smallest Black firms in one digital marketplace. USBC is also forging ahead with a group of industry-leading technology partners to announce a Black business certification program aimed at increasing contract awards from both the federal government as well as corporate America. These programs will put corporate and government sector rhetoric to the test and truly improve the investments within our community. These are just a few actions that the USBC is taking to ensure that Black Americans weather this storm. We welcome federal legislation that will bolster, not overlook, Black America and close the expanding racial wealth gap. We welcome the challenges that the Chamber has passed the HEROES Act, but believe legislators who understand the importance of safeguarding the Black community must embrace equitable policy that will include reforming the 8A program to make sure that the most vulnerable and impacted entities, Black firms, receive priorities focused between 2021 and 2026. Reauthorize the Obama-era quick pay initiative to guarantee that Black government contractors are paid within 15-day period, and also ensure that within the discussion of a new infrastructure bill, that Black and local businesses are included in the contract opportunity. Reconsider the OCC's new CRA proposal to certify that changes truly benefit Black America, and prioritize legislation that will provide Black-owned businesses with additional access to SBA loans, training and education programs, tax incentives to invest in startups. Finally, lawmakers must pass legislation that will codify the MBDA into law, increase Department of Commerce's appropriation.
I must remind the gentleman his time is up, but thank you very much.
Thank you.
Thank you. I now recognize Carmen. I recognize you for 5 minutes to give oral presentation on your testimony.
She's muted.
Can you hear me?
Yes, thank you very much. You may proceed.
Thank you, Chairwoman Waters, Chairwoman Beatty, and members of this committee for the opportunity to share testimony on behalf of the U.S. Hispanic Chamber of Commerce. I am the President and CEO of SDI International, one of the largest minority and women-owned businesses in the U.S. My team has been providing procurement and business services to Fortune 500 companies for the last 27 years. I am a Hispanic immigrant and an advocate for women and minority-owned businesses. Today, I'm honored to represent the U.S. Hispanic Chamber of Commerce as the chairwoman of the board of directors. The UHCC is America's largest Hispanic business organization. We operate as an umbrella for more than 250 local Hispanic chambers and business associations nationwide. We represent over 4.7 million Hispanic business enterprises that contribute an estimated $800 billion annually to the U.S. economy. The Hispanic community has been affected the most economically by COVID-19. A study made by Stanford University shows that 65% of Latino-owned companies in the U.S. report they will not be able to continue operating beyond 6 months. This is the reason why 60% of Latino families have lost jobs and pay cuts since the pandemic began. Furthermore, working from home is not an option for over 84% of Latinos, making our community extremely vulnerable to the challenges our country is facing. According to a U.S. Latino survey, millions of Latino families and businesses did not receive any support from the CARES Act, including 48% of households earning less than $25,000 a year. Due to the severity and urgency of the situation, we would like to collaborate with congressional leaders to participate in the creation of legislation that will economically impact Hispanic businesses. We are advocating for the following: expand opportunities for our business community to participate in federal procurement contracting. We stand ready to serve as a technical assistance bridge to provide necessary education for our members. Forgive all 2019 payroll taxes for America's 30 million small businesses. Provide an additional $65 billion for a minority equity fund to support minority business enterprises through economic relief programs implemented by Treasury, the Fed, and SBA. Expand lending for minority depository institutions and community development financial institutions. More transparent reporting on the Paycheck Protection Program and disaster relief programs. As Congress continues to allocate stimulus funding, minorities need to be included in the management, distribution, and grant allocation of these funded programs with the same access to Congress as any large company. Allow undocumented business owners and undocumented workers who can prove that they have paid U.S. taxes in 2018 to take advantage of the existing CARES Act and other stimulus funding. I would like to share statistics related to the economic impact. Prior to COVID-19, Latinos started businesses at 3 times the rate the national average, and Latinas started businesses at 6 times that rate. 1 out of every 4 small businesses are run by a Hispanic entrepreneur. 60 million of Hispanic Americans account for 2.3 trillion of the U.S. economic activity. If Congress encourages financial institutions to provide capital for our community to scale up, an additional 1.38 trillion will be generated for the U.S. economy. If we fail to support our businesses, our economy will shrink by billions. We believe far exceeding the investment needed from the federal government in order to rescue them. I thank you for your time, and we look forward to collaborating with you to create a lasting change. Thank you.
Thank you very much. Kerrigan, you are now recognized for 5 minutes to give an oral presentation on your testimony.
Thank you very much, and good afternoon, Chairwoman Beatty, Ranking Member Wagner, and of course, Chairwoman Waters, all members of the committee. Thank you for the opportunity to be a part of this hearing today and for focusing on the critical issue of access to capital for women and minority-owned businesses, particularly during this unprecedented period of time for all small businesses and indeed all Americans. SBE Council is an advocacy, research, and education organization dedicated to protecting small business, promoting entrepreneurship. And for more than 25 years now, we've worked on a range of issues, including access to capital to strengthen the ecosystem for startup activity and small business growth. As noted by my fellow witnesses, closed financial networks, longstanding financial institutional biases, and underserved markets work against the efforts of women and minority entrepreneurs who need capital to start up, operate, and grow their businesses. While the bipartisan CARES Act got money out the door quickly and helped many small businesses, the distribution channels of the first tranche of the funding underscored how the traditional financial system leaves many small businesses behind, particularly women and minority-owned businesses. That is why, and very early on, before the launch of PPP, we were vocal advocates to bring fintech lenders into the program to reach the kind of businesses PPP was also intended to reach, including women and minority-owned businesses. Bringing fintech into the PPP program certainly helped in reaching many small businesses that were falling through the cracks, but even when you account for their participation along with the late involvement of the CDFIs, significant numbers of women and minority-owned businesses have been left without the capital they need or needed to weather and navigate the COVID-19 crisis. As I noted in my written testimony, this was likely related to the design of PPP, which many self-employed sole proprietors felt was not structured for them. As we know, as many as 95% of Black entrepreneurs are sole proprietors, and 88% of women-owned businesses fall into this category as well. So we know that Congress is looking at some additional fixes for perhaps a P4 program, many of the elements that we support to address these shortfalls, and SBE Council is engaged in these discussions. Support is obviously still needed given the uncertainty of the pandemic and how it is and will continue to affect reopenings and the economy moving forward. In a recent NABO survey, 45% of respondents stated that they still need access to capital in the form of grants or loans. We see the private sector, large companies, successful entrepreneurs, as well as state and local governments stepping up to meet the capital needs of struggling small businesses. And we hope this continues because the need is vast. And we were pleased to see the SEC advance a temporary and conditional rule that eases some of the red tape and costs associated with regulated crowdfunding. Small businesses are just learning of this temporary rule, which unfortunately expires August 31st, and we are asking that it be extended at least to the end of the year. The rule truly was designed to help small businesses, and the feedback that I am getting from several of our online platform members that we work with, who largely serve women and minority businesses, is that the relief is making a difference in terms of making this method of financing more accessible to these firms. With respect to investment crowdfunding in general, there is a tremendous potential and momentum behind this approach to financing for women and minority entrepreneurs. We believe another proposed rulemaking moving through the SEC, which allows for testing the waters, lifting the cap that can be raised from 1 million to 5 million, the use of special purpose vehicles as passed by the House in legislation sponsored by Chairwoman Waters, and demo day clarification will simplify and improve the crowdfunding offering framework, which will make it more accessible and cost efficient for women and minority entrepreneurs. We are also exploring the concept of a crowdfunding public-private partnership, whereby the federal government can match successful raises up to a certain dollar amount, along with investment tax credits. They do this in the UK, and it has been very successful in that country. At the end of the day, there is an extraordinary amount of private capital out there, and SBE Council is very committed to policy innovations and incentive that unleash that capital and get it into the hands of women and minority-owned businesses. There's a lot of work to do, and I look forward to our discussion today. Thank you very much.
Thank you so much for your testimony. And now, Jenell Ross, you are recognized for 5 minutes to give an oral presentation of your testimony. And first, let me say, I would also like to congratulate you on the 23rd anniversary of you leading Bob Ross Automotive Group.
Thank you, Chair Beatty, and thank you, Chair Waters and members of the committee for the opportunity to share my story with you today. My name is Jenell Ross, and I am the president of the Bob Ross Auto Group in Centerville, Ohio. And I am the only Mercedes-Benz and Buick GMC dealerships owned by an African-American woman in the U.S. My father, Robert P. Ross Sr., was selected to be in the first class of the General Motors Minority Dealer Development Academy in 1972. My father was the first in his class to purchase a dealership and was the only one when he passed away to still be in business. My father became the first African-American automobile dealer in the state of Indiana, Ohio, Kentucky, and West Virginia, along with being the first African-American international harvester dealer in the U.S. in 1974. In 1979, my father purchased a Buick and Mercedes-Benz dealership in Centerville, Ohio, and he became the first African-American Mercedes-Benz dealer in the world. In 1997, my mother, Norma J. Ross, assumed command of the dealerships after my dad's untimely death. At 27 years old, I was thrust into running the day-to-day operations as vice president and dealer principal. Imagine walking into an automobile dealership meeting as the only sometimes female and/or person of color in the room that didn't work for the manufacturer or the travel company that set up the meeting. I became president of the Bob Ross Auto Group in 2010 as the result of my mother's passing. It's been 23 years this week that I've led our organization, and I hate to say that the diversification of the automobile dealer body is no better than when I started. According to the National Association of Minority Automobile Dealers, NAMAD, at the end of 2019, there were a total of 1,243 ethnic minority automobile dealerships in the United States out of 19,000. The breakdown is as follows: African American, 265, Hispanic, 585, Asian, 283, and Native American, 110. Ethnic minority women represent 72 of the 1,076 women-owned automobile dealerships. Only 4 of these women are African American: Gail Martin, Juanita Barranco, Elena Fairhurst, and myself. Since the initial launch of PPP and EIDL programs, several financial institutions explained to many small businesses that they were excluded from gaining access to these financial opportunities because of the Know Your Customer rule, even if the business had a banking relationship without having a credit lending history with them. NAMAD states PPP left over 60% of the minority auto dealer body without bank approvals and/or were told to seek another financial institution to apply for funding in the first round. Historically, access to capital has been the leading concern of women and minority-owned businesses to survive, and during this pandemic, it has been no different. Even though the Bob Ross Auto Group has a very strong relationship with our financial institution, I too faced obstacles when applying for the PPP loan. After several days of waiting for proper information to submit our application, I too was instructed to go elsewhere. Fortunately, I was able to approach another financial institution, and in a matter of 48 hours, I was given approval. I, unlike many women and minority-owned businesses, had the reserves and the safety net to financial relationships to fall back on. Despite these preparations and adjustments of our business operations during the pandemic, we are continuing to invest thousands of dollars to ensure the safety of our employees, clients, and facilities. I still feel a heightened sense of uncertainty, much like other women and minority-owned businesses, of not knowing if we will be able to survive in the short term. In the end, the PPP program has allowed small businesses to keep our doors open, helped reduce the amount of employee layoffs and business closures. The majority of all ethnic minority auto dealers are located in rural areas who provide a significant amount of resources and financial support to local businesses, civic, and community-based organizations. NAMAD's concern is once these funds run out, will these small businesses be forced to lay off employees once again who had to get rehired to participate in the PPP program? As women and minority-owned companies continue to pivot their operations during the pandemic and navigate new normal, it's imperative to utilize multiple resources to help drive their sustainability and growth. Being certified through WeBank and NMSDC allows business owners to develop relationships with corporations and businesses who value diversity and inclusion and are looking to partner with like-minded companies. We have been awarded many contracts from the state of Ohio minority set-aside bid regarding their vehicle needs. We continue to work with our regional partners and to help grow our business and yield success of winning bids to add revenue to our operation. At the end of the day, without access to capital, a sound financial relationship, and education, the wealth gap for women and minority-owned businesses will continue to widen. Thank you.
Again, thank you to all of the witnesses for your testimony. I recognize myself for 5 minutes for questions. Recently, the Federal Reserve Bank of New York found that approximately 60% of minority and women-owned businesses are considered at risk or distress. We also read that many of them use their personal funds. Our committee has held hearings to examine the cause and impact of racial wealth disparities. To our two chamber leaders of the African American Chamber and the Hispanic Chamber, how does the racial wealth gap impact access to emergency funding for minority-owned businesses during periods of financial challenges as we're going through now with COVID-19? So that will be to the two of you. And then Ms. Ross, do you believe the racial wealth gap impedes the success of minority and women-owned businesses? So I will start with you, Ron Busby, and I'll then go to you, Ms. Castillo.
Thank you for the question, and thank you again for allowing us to give our testimony. That is a great question, and as we talk to our business members across the country, the number one concern that they all have—
Could you speak up a little bit, Mr. Busby?
Yep. Thank you again for allowing us to have this testimony. As we talk to our members across the country, the number one concern that they all have is access to capital. There was a survey that was done that said that the average Black family had roughly $400 in savings for an unexpected emergency. Those same homeowners, and many of them are now business owners. And so you are placing the burden of having excess capital to get them through tough times with very limited resources collectively. The second thing, the access to capital, the cost of that capital is extremely expensive. The average African American is paying twice the rate of our white peers, and only about 33% of our businesses actually had a line of credit. So when we were
I'm going to have to interrupt you to go to the other two because I only have a few minutes left. So I'll go to the next witness. Thank you. Ms. Castillo. I'll go to you, Ms. Ross, because my time is ticking down. So, Ms. Ross?
Yes, can you repeat the question, Chair Beatty?
Yes. Do you believe that the racial wealth gap impedes the success of minority and women-owned businesses?
You know, it comes all back to education, and if without the opportunities to educate minority and women-owned businesses, it does put us at a hindrance in terms of continuing to move forward. And if we have the opportunities, we've definitely shown that we deserve to be at the table and be in the room. But without those opportunities, and for people not thinking that we should be, then that continues to create the problems that we have.
Thank you. To all of the witnesses, and we'll go with you, Ms. Carrington, and then go backwards. I'm very proud that all of you talked about disparities and the challenges, and I was really pleased to hear you all mention the small businesses, the gigs, the 1099, et cetera. Early on, I went to the House floor and advocated for those, and I would like to believe it had an impact on our second round of funding. The question is, what would you say to corporate America and to banks right now in this space we're in? People are really putting more value. Majority companies are coming to us with money. Maybe some of it is guilt dollars. What would you say to them to help put more African American and other minority businesses into the hopper? Ms. Kerrigan.
Well, I would say to, put your money where your mouth is generally, and to really make a concerted effort to outreach to this community and to look at, the process by which you're outreaching and any type of the systems, the application process, whatever that you may have for accessing capital, potential loans, potential dollars, and to simplify it as much as possible, right? So one size does not fit all, and you really have to meet the needs of these entrepreneurs where they are. And a lot has to be simplified and understanding, that they are not all the same businesses.
Okay, we'll try you again, Carmen, if you're unmuted. Is there anything in 10 seconds you'd like to add?
Yeah, pretty much. I totally agree with Karen. In our community, only 3.7 billion PPP went to our community, and the average loan was about $54,000. So I would just put. Thank you.
Thank you. I like that. I'm going to end with put your money where your mouth is. Don't worry to the other witnesses. We will have plenty of other questions coming from my colleagues. At this time, I would like to now recognize the distinguished ranking member for 5 minutes of questions. Congresswoman Wagner.
Thank you, Madam Chairwoman. Ms. Kerrigan, in your work with entrepreneurs and startups, what sort of regulatory barriers, you touched on this briefly, have you experienced that have made it difficult to access capital and financial services?
Well, I mean, the biggest barrier right now is actually getting to, if you're talking about investment capital, is actually accessing and getting access to the investors, right? But when you're talking about, a lot of them have looked at equity and debt-based crowdfunding, and they see it has great potential. Two things I think that are holding them back. One is some of the red tape and a lot of the burden in terms of the first forms, filling it out, what comes next. And another piece of that, which I found very interesting, and we're learning more about this, is this temporary rule relief that the SEC did. Most of these businesses are looking for debt financing. And so the crowdfunding rules are treating all businesses the same, one size fits all. And I think we have to look at this a little differently and say, well, gee, does the information that the SEC needs or the intermediaries have to collect, does it have to be as intense as, say, an equity raise versus a debt raise? And can we look at the structures and say, do they need to be a corporate structure in order to access debt finances as they do right now? or can they be, you know, an LLC, or can they be sort of a sole proprietor, because we know they can get bank loans. So, but right now, obviously, uh, Congresswoman, the climate is so different than it was pre-COVID-19. So, and I don't know if you're talking about with the PPP loan or Main Street lending, but
Ms. Kerrigan, Ms. Kerrigan, if I could interrupt you, your testimony, you mentioned the idea of creating a public-private partnership fund, and I'm very interested in learning more about this co-investment model and how it could provide increased access to capital for women and minority-owned businesses. Could you go into a further detail about this fund? You also mentioned a United Kingdom has a co-investment model. And if you have any specific data on the success of the program for women and minority-owned businesses, I'm very interested.
yeah, and I'll follow up with more specific information and data. Yeah, we're just beginning to talk to our members and sort of the crowdfunding community about this. It exists in the UK. It has been very successful, so much to the extent that they are increasing the fund. You know, most of the startup ecosystem raises its money online now because there are tax credits, and UK policies do support investment crowdfunding. You know, the whole notion of the public-private partnership is that the federal government, you know, will, if an issuer, if a small business has raised X amount, that the federal government will come in and will match that. But they'll work with the existing platform. So the government is not picking winners and losers. They're picking who the crowd believes, the investors believe, you know, a business that can make it. And we do know that with crowdfunding in general, that women entrepreneurs have more success at crowdfunding raises. And we do know that there are many more minority businesses that are using crowdfunding, going to their local community in order to keep those businesses in those communities and giving their customers sort of the first shot, you know, at investing in their businesses.
Okay, and let me interrupt you just in the interest of time here. Ms. Castillo and Ms. Kerrigan, but Ms. Castillo, if you could go first. I was proud to introduce the Bipartisan Calculate PPP Forgiveness Act with my colleague, Congressman Lacey Clay. As I mentioned in my opening statement, this bill would direct the Small Business Administration to create or certify a PPP loan forgiveness calculator that's free and accurate, so small businesses can more easily populate their loan forgiveness applications. It would also help resolve tensions between lenders and small businesses over what payroll expenses should be covered, et cetera. Would this benefit your members as they navigate forgiveness applications, Ms. Castillo?
Yeah, I think it will. I really think it will. They do need quite a lot of education as well, but I like that what you just proposed. Yes.
Ms. Kerrigan.
Yes, I think
me?
it's a great idea because it would promote certainty across the financial, you know, we're all using the same calculator, right? And I think having it as simple and certain so that businesses know what the government is putting out there in terms of what will be forgivable, it's across the board and it's not arbitrary. I think it's very important.
We're going to try and include this in the next package going forward. So I thank you for your input. And Madam Chairwoman, I am out of time and I yield back.
Thank you very much. The chair now recognizes the distinguished chairwoman of the Financial Services Committee, Congresswoman Maxine Waters.
We're going to unmute here now. Thank you. Well, let me just say that as I am sitting here watching you, and I'm thinking that how important diversity and inclusion is. If it was not for diversity and inclusion, I would not be sitting here with you on this very, very important hearing. You would not be sitting here as the chair of the Subcommittee on Diversity and Inclusion. And we would not have been here at a time when we have COVID-19, where we were able to exercise some power in order to do everything that we could to try and get resources out, liquidity into the agencies that should have the kind of resources that they can make the loans. So I'm very appreciative for your work, and you were primed for this this task based on your work with AMWI and the way that you came to this Congress, indicating your support for opening up opportunity. Now, we have been confronted with COVID-19 and PPP. And, you know, we learned an awful lot that we had not expected. First of all, I want to thank those banks that participated and did it the right way. But I want to tell you, some of the biggest banks in America literally opened up portals for their concierge clients early. And they spent millions of dollars, maybe billions of dollars, funding those concierge clients, their big private clients. And somehow, in the legislation for the CARES Act, it had opened up the opportunity for SBA loans that were normally for those businesses 500 and under to now be spread out to restaurants and hotels, et cetera, who had many locations and franchises, et cetera, and they were able to get millions of dollars. That was not intended. And so we know about that. We've learned an awful lot about that, and we have to shut that down so that that will not continue to favor the high private clients of banks. In addition to that, we learned an awful lot about what was going on with our Minority Business Development Agency that was, created by an executive order in 1969 for Minority Business Development Agency was, supposed to be tasked to foster growth of minority-owned businesses in America. But it's at the whim of presidents and secretaries of commerce because it's not in law. And so I heard you when you talked about that, Mr. Busby. We're going to take care of that because we want every opportunity for our small businesses and our minority businesses, our women-owned businesses to have access to capital, or we won't survive. I heard you when you talked about the 8A Set-Aside program. That was a very successful program. Minorities that got involved with it did well, but guess what? They got shut down because you did too good. After you reached a certain level, they excluded you from the program. We've got to open up a set aside all over again. I convened a lot of our CDFIs who did not have access to capital and learned that they were operating all at such different levels. For example, you have some that had no liquidity. They were dealing with some joint venture type opportunities. We had some with, just a small amount of resources that were begging for more. But that is under the Treasury Secretary, who has the opportunity to fund through that CDFI fund. And we're going to increase that and open up more opportunities for CDFIs. Also, we've been working for a long time with MDIs. And it is very important for you to know that because of Ms. Velasquez and myself, we were able to get that $60 billion and target it so that $10 billion of it went right to the MDIs and to the CDFIs and to our credit unions and community banks. It would not have happened had it not been minority women sitting there. That's why opening up opportunity and diversity and inclusion is so important everywhere, in the private sector, in the government sector, everywhere. Unless you have people who not only understand these issues, but have been the victims of these issues and see how wealth has not been able to be accumulated in our communities, you'll never get the opportunities open up. So I'm pleased that we were able to get right to Mr. Mnuchin, the treasurer, right to Mr. Powell, that is also with the feds, so that we were able to change some of the ways that they were doing things. I won't go into all of that now, but we absolutely changed the way that the Main Street facility was operating with the feds. We absolutely was able to get the $60 billion and direct more toward the CDFIs. And so I'm so thankful for your work, Ms. Beatty. I'm so thankful for this hearing. I'm so thankful for the witnesses who are telling us how we can even do better. And I'm looking forward to correcting some things, to looking at the fintechs to open up another opportunity. And I yield back the balance of my time. And I thank you for allowing me this time.
Thank you very much to our chairwoman. Now the chair recognizes the gentleman from West Virginia's 2nd District, Mr. Mooney. Mr. Mooney, are you unmuted?
Yeah, I'm unmuted here. I don't have any,
Proceed.
further comments. Thank you.
Thank you. The gentleman yields back.
I yield back.
Now it is my distinct honor to introduce the subcommittee chairman, Mr. Clay, who is chair of Housing, Community Development, and Insurance. You are recognized for 5 minutes of questions.
Thank you, Madam Chair, and thank the ranking member Wagner for conducting this most important hearing. And let me thank the witnesses for their participation today. The racial and gender wealth gap has been a persistent challenge for this country and has increased over the past 50 years and limits the ability of would-be women and minority entrepreneurs from starting new businesses. And according to a racial wealth gap analysis by McKinsey and Company, African American and Latino families have approximately 1/10 the wealth of white families. Startup businesses need capital. Unfortunately, minorities are not as likely to have access to generational wealth and personal assets as a funding source for new business formation as a result of the wealth. So my question is to Ms. Castillo and Mr. Busby. What have your members shared about how the lack of familial wealth affects the startup of minority-owned businesses? We'll start with Ms. Castillo.
Well, in my community, as you know, I think they are the most affected. When every time they go to a bank, just because we're Latin, they were already, it's like, it's like, that's it, and not, they don't have the same facilities, they don't have the same advantages that a non-white. When I started my business, my business, it took me quite a while to get a loan, and I just I don't know what to say. Hello. Hello.
Yes.
You may proceed.
We have in our board of directors, can you hear me now? I'm sorry. Yeah, in our board of directors, we have several financial institutions, and those financial institutions, they are very committed to our community. They do have special programs for them. And like, for example, JP Morgan and Goldman Sachs and Wells Fargo. And they do have a special programs just for us, and they certainly treat us all equally.
Thank you for your response. Mr. Busby, how has the lack of familial wealth affected the startup of minority-owned business?
Thank you, Representative Clay, for your question. Again, if you ask any small business owner what their number one concern is, they will say access to capital. But when you ask a Black business owner, he will say, or she, his number one, number two, and number three concern is access to capital. Not just the access, but the affordability as well as the availability of capital to be able to start and sustain their businesses, and not just through pandemics, but just through normal business practices. It is extremely difficult for Black businesses to be able to access the capital. And the reason that it's important is we lost 450,000 Black-owned businesses during these last 3 months, which means they all have customers, clients, vendors, employees. And for those existing Black-owned businesses, we need to look at mergers, acquisitions, joint ventures to be able to take advantage of those lost businesses, to be able to merge those into our existing Black-owned businesses. And so at the U.S. Black Chamber, I know I have heard the conversation about fintech. We believe that the future of Black-owned businesses is going to be with traditional Black and minority CDFIs. During this pandemic, they told us to go to your existing bank to ensure that you had a relationship to get the funds. If we don't establish banking relationships now, during the future, our businesses will be hit twice as hard. And so for us, we're looking for capital, but also we're looking for institutions, financial, to ensure that they lower or remove the barriers to credit and make sure that it's affordable for our businesses.
Thank you so much for that. And I heard Representative Wagner, the example of a barber shop having to go to a payday loan. I want to say Ms. Ross mentioned that one of the obstructions in the PPP program was with not having a loan activity with an institution. Could any of the witnesses respond to that? Oh. Real quick, anyone want to talk about the challenges the businesses made that they had when they went for PPP?
Well, if the name of the program was the Payroll Protection Plan, and of the 2.6 million Black-owned businesses, only 2.5 million have no employees. It only left roughly 100,000 Black-owned firms that were even qualified to go and get the additional funding that they needed. So just on the name of the program, many of our businesses said it did not include us. Secondly, if I had to have a banking relationship with a lending officer, only 30% of our businesses had that. Third, if they made the program available on a Friday,
I'm having a little trouble hearing you,
can you hear me?
The gentleman's time. I have to remind the gentleman that his time is up. I'm sorry.
I yield back.
Thank you. The gentleman yields back. The chair now recognizes the gentleman from Tennessee's 18th district, Mr. Costos, for 5 minutes of questioning.
Thank you. I want to thank the chairwoman for convening today's hearing and the ranking member, and certainly appreciate all the witnesses coming before us to testify today. Ms. Kerrigan, if I could, last I checked, there's around $130 billion left in the Paycheck Protection Program. Of course, we know that as of now, it goes through August the 8th. Last week, we had testifying before our committee, Treasury Secretary Mnuchin and the Fed Chairman Jerome Powell. Secretary Mnuchin, in his remarks, said that he wanted to repurpose the remaining money to assist what he characterized were especially hard-hit businesses. My question to you is, if you had 15 minutes directly with Secretary Mnuchin or Fed Chairman Powell, what would you tell them about specific ways to use this leftover money to provide additional relief, specifically to minority-owned businesses or women-owned businesses?
Well, I think as the program went on and as there were changes made and they began to onboard fintech and CDFIs and, the distribution channels, I think, got better in terms of reaching, more women and minority entrepreneurs and self-employed, businesses and all of those types of businesses that didn't have those commercial relationships with their banks. But I would say this, I think, in acknowledging and recognizing that they do want to address the hardest hit and those businesses that weren't able to, capitalize or use the program the first time around, they're on the right track. And if we are repurposing the money, there does need to be some of that money that will be sort of set aside, for employers with 10 employees or less. That, we do need to look at, yes, those industries that have been hard hit and perhaps allow some of those businesses to come back for another PPP loan. But I would also say that you need to broaden the usage of what can be forgiven. The 75-25 rule that became 60-40, I mean, that was very restrictive to many types of small businesses, those with high overhead, those self-employed people. So we need to change that. You need to include a lot more in forgivable expenses, PPE, cloud services, all the things that businesses have had to expend money on in order to survive COVID-19. And then finally, I would say you really need to simplify the whole process. And if you're going to start the program and it's going to be repurposed, from the get-go, there's got to be clear guidance. It can't continually change. And that confused so many small businesses. So a simple application process, reaching more businesses, dedicated and targeted to the smallest of businesses, broad usage, and I forgot the last one, but I've already said it in my remarks, but really, guidance. I mean, when you come out of the program, when you launch out of it, the guidance has to be clear. It's very, very important.
Thank you. Ms. Ross, in your testimony, you talked about difficulty you had trying to first apply for it. Ultimately, you got the PPP loan. How confusing did you find the guidance that was given to you during the course of the process, or how difficult?
Well, being a small business owner, as things were evolving and changing daily, and trying to make sure the health of our employees was first important to us. But the guidance, as Karen said, continued to change, and ultimately the application wasn't as bad. But now looking at the forgiveness application is like 4 times or probably 8 times the length of what the original application was. So with that, we've spent a lot of time, my management team and I, of trying to make sure that we're following the guidelines in terms of getting the most forgiven, but those keep changing. So it's what we worked on a month ago has changed for today. And I received an actual email last week that said we're still not at a position to really go forward with the application on the forgiveness, and that we should have that in another month or so. So it has taken a lot of time away from us having to navigate and pivot and change our organization. And being an automobile dealership during a pandemic with the number of touch points of us involved with vehicles, and getting people to understand that has been increasingly difficult from a compliance perspective. So it's just added to the uncertainty and the anxiety of making sure that we're following all guidelines in addition to health and safety guidelines as well.
Thank you so much. I yield back.
Thank you. The gentleman yields back. The chair now recognizes the gentleman from Texas 9th District, the chair of the Oversight and Investigation Committee. Mr. Green, you are now recognized for 5 minutes for questions.
Thank you very much, Madam Chair. I'd like to associate myself with your initial comments. I also would like to thank the chair of the full committee. It's an honor to serve under her leadership. And I especially associate myself with the comments that she made with reference to the Minority Business Development Administration Act, something that I will be working with her on. I think a little bit of history is appropriate. In 1979, under a Republican administration, Richard Nixon, by way of Executive Order 11458, the Advisory Council for Minority Business Enterprise was created. And then under a Democratic administration, President Carter, 1979, the Office of Minority Business Enterprise became the Minority Business Development Agency. I'm mentioning both of these administrations because it seems to me that what the chairwoman has proposed, and I'm having the honor of working with her on, is something that should appeal across party lines to both Democrats and Republicans. Because, in fact, what this agency will do, if established as an independent agency as opposed to an extension or arm of another part of the government, if it is an independent agency, it will provide bootstraps in the form of grants. Many of our small businesses were not able to take advantage of the PPA because they were not prepared with the technical assistance necessary to apply for these loans. They just didn't get in line fast enough. And those who had lawyers and accountants and CPAs, they were in line and ready to go from day one. As a matter of fact, truth be told, they were ready before day one. They were waiting for day one to arrive. And upon the arrival of day one, all that was done was hit send, and your application was in for all practical purposes. Well, what we'd like to do is provide these small businesses with the bootstraps necessary to compete when opportunities are available. It's a wonderful thing to know that opportunities are available, but it's an even better thing to be able to take advantage of opportunities when they are available. This administration would provide just such an opportunity. It would become a standalone entity, very similar to, but not the same as, the SBA. The SBA does marvelous work. I salute the SBA. This entity would be given a similar opportunity as it relates to providing what I call the bootstraps in the form of grants. So today, let me ask the panelists, understanding what this agency would metamorphose into, is this something that you believe you can support? I'll start with the witnesses with the chambers. Let's start with the Black Chamber first, please. Is this something you can support?
Mr. Green, yes, this is Ron Busby with the U.S. Black Chamber. We were the 2016 Advocate of the Year for the Minority Business Development Agency. We believe in their mission. We have seen the results of their ability to receive additional funding in the second round of the stimulus package. And we saw what they were able to do with the funding, and it has made an impact. They have awarded both the U.S. Black Chamber as well as the Hispanic Chamber and other minority business organizations with the resources and the funding that they need to then turn around and make our businesses have the resources that they need as well as the
Let me intercede quickly and ask this of you. You hear people quite frequently talk about pull yourself up by your bootstraps. Are these grants the kind of bootstraps that we need so that our businesses can not only survive but thrive?
Yes, and it's not just the capital. It is also the technical assistance that our businesses need. So we need both the resources of funding as well as administrative and technical assistance to not just be able to get the bootstraps, but we need the boots themselves to make sure that we can walk through difficult and uphill battles that we're facing throughout just not this pandemic, but just life.
Well said. Let me say well said and move to the other chamber. Would you kindly express your concerns with the Hispanic Chamber? Could you support this legislation?
Unmute, please.
Let's assume that there's some.
A very successful relationship with the MWBE agency. We're very happy. We've been working with them for the last 2 years, and we're very, very happy. And yes, we do support your legislation.
Thank you, Madam Chair. You have been very generous with the time. I yield back.
Thank you so much. The gentleman yields back. Now the chair recognizes the gentleman from Ohio 16th District, Mr. Gonzalez. You have 5 minutes for questions.
Thank you, Madam Chair, and thank you, everybody, for your participation in today's very important hearing. Ms. Castillo, I want to start with you as the son of a Latino business entrepreneur. On the PPP, you talked about the difficulty that our community had in accessing the loans. I guess I have 2 questions. Number one, is that still the case now that we've changed the program and extended it? And if it was and is, was that because of the structure of the program or because there was something happening in the application process that was sort of weeding out Hispanic business owners?
Well, it's a bit, hello, can you hear me?
Yes.
Can you hear me?
Yes.
Yeah, okay, I'm sorry, we're having a lot of technical issues. Yeah, at the beginning, actually, our community didn't get that much. It really didn't. Now, once you fix it, they get an average of like 54,000 loans, so it's better, it's better. And I think the issue is our businesses are very small businesses, as you know. It's the lack of having a line of credit or of having even the education to go and apply. The process was complex. And as you know, mostly of the first year of the PP loan went to top corporations with lawyers, corporations that have the resources. Our community just doesn't have those kind of assets. But I must say it is getting better. I think that our community has gotten like almost 7-something billion total but in average, again, a small average of like 54, 55,000.
Thanks. And that's consistent with Mr. Busby and what she said, right? And I think what this hearing has sort of shined a light on is something we knew, which is the PPP program's not perfect. And I think also it shined a light on the fact that it just didn't hit our minority communities in the way that maybe we would want. And so as we go forward, I think retooling it or having a different program probably makes the most sense, frankly. Ms. Ross, I want to transition to you. You have such an amazing personal story. And I thank you for sharing it. And one of the things you highlighted is the difficulty that we have getting diversity in the automotive space and entrepreneurship in general. And I guess I'd like to ask you, just sort of broadly speaking, what do you think we could be doing a better job on as a society, but also congressionally, to support women and minority entrepreneurs who are taking that big risk?
Well, I mean, it goes back to what I said in my statement. One is education, but the access to capital has historically limited minority, specifically in the automobile business, due to the heavy investment that is needed in order to become an automobile dealer. And within our industry, there's a lot of generational families that have been able to pass down their dealerships. And from an African American specifically perspective, we have not had that. For me to be the only female African American second generation just speaks to that volume, where there are hundreds, of Caucasian women that would be able to be in that position. And I give kudos to NAMAD to starting organization to help the next generation to try to facilitate that from an earlier perspective. But it does come back to access to capital, which is a huge investment that is needed to become an automobile dealer. And if the manufacturers need to take the responsibility of assisting and widening and broadening their programs that they're offering, because there are a lot of individuals that are capable, that can perform to the level of non-minority dealers if given the opportunity.
Thank you. And then Ms. Kerrigan, with my final 40 seconds, are there any statutory or regulatory barriers that you see that limit this access to capital that we could remove either temporarily or in full as we navigate the crisis?
I do. I think, we're big on equity and debt-based crowdfunding. We're, led the whole effort, made that legal to begin with. And I just think there's tremendous opportunity for communities to support the businesses in those communities. And thankfully, the SEC is addressing, I think, some of the rulemakings to lower the barriers, but there's more Congress can do as well in terms of lifting the caps, in terms of accredited investors, in making sure that we don't treat debt and equity the same. And I think that's going to have to come through congressional action, because most small businesses are looking for debt and not for equity. And again, I think we're at a point where the community wants to support these small businesses, and small businesses definitely have the customers and the family that can support them. So we've got a list of things I can share with you, Congressman, and I thank you for that question.
Thank you, and I yield back. Thank you, Madam Chair.
Thank you. The chair now recognizes the gentleman from Florida's 5th District, Mr. Lawson. You have 5 minutes for questions.
Thank you, Madam Chair, and I would like to also thank the witnesses for appearing here today. I have been working with minority business from the standpoint of being in the insurance business, but also, and I think, Ron, you might know about the publication called the Black Pages. In fact, I've done it in this area for over 30 years. Well, one of the problems that I found, and maybe you can elaborate it on it to a certain extent, is that it was very difficult and has been a very difficult in keeping that publication going for 30 years, because we have a hard time in minority businesses to advertise. Not only am I a member of the Black Chamber of Commerce, I'm also a member of the main Chamber of Commerce and have served on their board. I'm saying that to say this: when we start having this problem, and sometimes it might be that the chairwoman, Maxine, might want to respond to it too. I found out that that those businesses, if they were attorneys, consulting firms, and so forth, that seem to be more in the mainstream of everything, they immediately applied for the PPP. But when the people that I was concerned about, by the corner grocery stores, the barbers, the beautician, and people of this nature, and I know Ms. Ross might have some concern to say, and I don't want to take up all the time, but I had a lot of difficulty in trying to get them to even apply because it seemed to be almost, it was that fear there. And so by the time they got ready to apply, they said all the money is gone. And I know right now there's about $100 and some billion that is still in there. But I want to ask Ron, how do you respond to that as being over the Black Chamber of Commerce? Do you experience some of the same kind of results?
Sure, and great question. And I would say we lost 450,000 businesses. And I want to keep saying that because we have $130 billion left. Had that $130 billion been made available and accessible to those 450,000 businesses, the majority of them would still be in business. The payroll protection plan, when it came out, again, the name said payroll protection. So that meant to a business owner that did not have full-time employees, they felt that it wasn't written for them. The second piece, if you look through the legislation, the 700 plus pages, the words Black or African American were never listed. And so again, when our communities heard about the stimulus package, they felt like it wasn't necessarily for them. Third, when they said go to the bank, again, the majority of our business members across the country may know their teller, may even know who cashes their check, have a checking account, a debit card, but they didn't have a lending relationship with the bank. And so they felt like they were displaced in the opportunity. And then lastly, it was just application fatigue. And so now when you go back to business owners and say, hey, there's money still available, they're nervous because they have now heard the Internal Revenue Service has placed additional funding for internal revenue agents to go out to make sure that the small businesses that may have gotten a couple extra $1,000 are now being audited and facing extra scrutiny. And so many of them have said, hey, I think I have made it through the most difficult times. We are getting ready to reopen. And so I have to think about the future as opposed to what has happened in the last 3 months. We're trying to educate our businesses that there are funds still available, but it really is about them understanding how to go about it and making sure that it's in the banks and community CDFIs that they have relationships with.
Okay, and thank you. Madam Chair, I just wanted to say, since you're here on this call, how do we get this message out to them in language, what Ron just talked about, to try to inform them? And I know Ms. Ross might have some idea, and I don't want my time to run out, but I'm just cut it off because that seemed to be a great deal of problem in the communication.
It was just really unclear coming out initially who, how, when, and where. And so for our community, it just took them a few days longer. And during those course of those few days, they heard that the funding was gone. I think that as you discussed, there are great opportunities through Black pages, Black online, Black media, Black news to ensure that our businesses understand how, where, and what is responsible for getting the additional dollars.
My time has run out, and I yield back, Madam Chair.
Thank you. The chair now recognizes the gentleman from Wisconsin's 1st District, Mr. Stahl. You have 5 minutes for questions.
Thank you very much, Chairwoman. Thank you for calling today's hearing. I think a really important topic. I want to build on what was just being discussed there and like to go back to you, Mr. Busby. One of my good friends was the head of the Milwaukee African American Chamber of Commerce, Dr. Eve Hall.
Yep.
She now runs the Urban League in the city of Milwaukee. And I've spoken with her and with others. And earlier, we were talking about capital formation. Representative Ann Wagner dove in there. And then later, you had comments about boots and bootstraps that I think is very topical. That not only do you need access to the capital formation, but sometimes you need to have some knowledge and some mentorship. And I know the African American Chamber of Commerce is very involved in creating those types of relationships Could you just share what you think are some of the best practices on making sure that we're getting information out, not only broadly, but in particular in the African American community as well?
Great question. And I do know Dr. Eve Hall. She's a graduate of Florida A&M University, which is also my alumni. And so when you speak to her again, tell her we said hello. I think the Urban League, as well as the U.S. Black Chamber and other local institutions, play a critical role. We are the voice of Black business here at the U.S. Black Chamber. So we make sure that we try to develop great relationships with our local communities and local business owners. But we still have challenges. In many communities, they're facing challenges that don't reach Washington, D.C. And so when they hear about what's happening here at the nation's capital, they don't understand the impact that it has on their local business and or local community. So it's our role through our local chambers to really be the mouthpiece for our local communities here to Washington, as well as from Washington back to our local Black and Latin businesses that we operate across the country. But I think we just have to be transparent. When we were asking for data early on about who was getting the loans, no one was able to share that. When we were yelling from the top of our lungs that we were going to lose 35 to 40% of our Black-owned businesses, no one heard that. And then the data came out that we had actually lost 41%. And now Congress and other folk are saying, wow, we didn't see it coming. It is about having a realistic conversation as opposed to having one that is based on emotion. And so we're saying we need transparency early on, from contracts to loans, as well as opportunities. And then the third piece, I just want to make sure that I get an opportunity to say, when we are talking about government as well as corporate America now saying, hey, we want to do more business with Black-owned businesses, we got to make sure that there is a certification to ensure that these businesses are exact Black-owned. And so that corporate America can actually certify and say that, yes, I'm supporting a Black-owned business, because right now we all fall under the umbrella of minority businesses. And we're not just minority businesses. We're Black businesses, we're Hispanic, Asian, and other. But we're not all Hispanic. And right now, when we're facing a pandemic that has a trifecta on the Black community, we need to be isolated out in reference to our support and as reference to the dollars that are being spent from both corporate America as well as the federal government. Thank you.
Thank you very much. And I appreciate your passion on the topic. And thank you for sharing your insight there. I want to shift gears slightly and ask Ms. Kerrigan a question. One of the things I think we've seen during this broader pandemic is the ability of us to leverage in the technology to make sure that we're getting access to people that may not have as easy of a time of getting access to bank loans. And as we're thinking about kind of online notaries and some of the other legislative reforms that we can do, I would ask you to comment on what you see as the role of leveraging some of the financial technology services that are available to make sure that we're getting access to those who may not traditionally have a seat at the table.
Oh, it's critical. I think it's so critical, and thankfully, but unfortunately, at the end of the first tranche, of those PPP funds, the fintechs were brought on board, and once they were, I think they made a pretty big difference in terms of these 21 lenders that did a significant amount of lending. So, it makes a big difference because they have the automation, they have the AI, they have actually between them all the customer lists where they were able to outreach to them. So yes, we need to have the modern systems. As we like to say, to our business owners and entrepreneurs know this, you have to meet customers where they are. We know they're using social media, they're using cloud services, they're using platforms. This is a platform-based economy. And in fact, the pandemic accelerated the movement, to this platform economy. So that's why fintech and technology is going to become even more important. And so the government does have to recognize that and not be an afterthought. It's got to be done at the beginning, of any program.
Thank you very much, Ms. Kerrigan. I appreciate, Chairwoman, you holding today's hearing, and I yield back.
Thank you so much. The chair now recognizes the gentlewoman from Massachusetts 7th District. Ms. Presley, you have 5 minutes for questions.
Thank you, Chairwoman Beatty and Chairwoman Waters. I do believe that these are old fights, but it seems that we might be on the precipice of ushering in a new moment, and that has everything to do with the vigilance and the leadership of both of you. So thank you for your leadership, and thank you to all of our witnesses for joining us today. While this crisis is unprecedented, the disparities it reveals in our economic system and subsequent federal response are unfortunately very familiar. From the Homestead Act to New Deal programs and the GI Bill, Black Americans have historically been locked out of large-scale government intervention and investment. We must not repeat the exclusionary policies of past federal responses. So what does that mean? That means requiring the disclosure of racial data to better inform our allocation of resources for everything from testing and treatment to small business relief. And I appreciate very much seeing data on who actually received PPP loans, but the data we need is on who didn't receive PPP funding, who was denied and why, and why was it late. So the National Bureau of Economic Research found that 41% of Black businesses have shuttered since the pandemic began. From the onset, experts estimated that up to 95% of Black women business owners would be left out of the program. Mr. Busby, could you speak specifically to the challenges faced by Black businesses, and that PPP funding and access to it was conditioned on access to banking?
Yes, again, when we first heard about the payroll protection plan, it was discussed on a Friday afternoon. By that Monday morning, the majority of the dollars had been already presented to 50 publicly traded firms in the amount of $250 billion. And so many Black firms did not find out about the opportunity until the 11th hour. We also know that, again, as I stated earlier, it was based on having a banking relationship as a lending program, and many of our businesses just did not have a loan currently because of the cost, as well as the inability to be able to get credit from an existing bank.
That's
and
right.
so that we did not.
Thank you. So, right. So just reiterating that, since the majority of minority, immigrant, and women-owned businesses are micro in size, beauty salons, barbershops, bodegas, the backbones of our local economies, yet, we've just heard from struggling owners throughout the district, based on the very point that you just underscored there. So the relief was nowhere to be found. And this includes Murray's Kitchen in Dorchester, which applied for PPP assistance back in May and is yet to hear back. Organizations in my district like BECMA, Commonwealth Kitchen, Amplify Latinx, JPNDC, E4All, and so many others have stepped up to provide businesses with support. But ultimately, this is about federal government relief. And so, as I said, these are old fights as a new moment. So I hope this new moment is about new action. And so I introduced, in partnership with Senator Kamala Harris, the Saving Our Street Act to provide micro business owners with direct grants, not loans, of up to $250,000. We have to be intentional. And so this bill requires 75% of the Micro Business Assistance Fund be set aside for minority and women-owned businesses. Mr. Busby, how does the SOS Act correct some of the challenges of previous relief efforts, and why is it so critical to provide relief in the form of grants instead of loans?
Well, we heard from Black Americans that the United States just wrote nearly a $2 trillion check in response to a stimulus that was needed from a pandemic. Black Americans have been saying we've been facing a pandemic for hundreds of years, and we want to have a conversation, and not necessarily just about reparations, but just about equity. And so as we talk about a stimulus package that is geared towards micro businesses, the U.S. Black Chamber is definitely in favor of that. We want to make sure that the dollars go to the businesses as well as the sectors that need it the most. 40% of all Black business revenue comes from 5 industries, and those 5 industries were the industries that were hit the hardest, and many of them were the same types of businesses that you have there in your district, from restaurants, beauty salons, nightclubs, social media types of places where you normally go to gather are now closed, and many of those businesses don't see the future, but they definitely need the income and as well as the grants to be able to have sustainability.
Thank you, Mr. Busby. Again, it's just clear it's not a one-size-fits-all approach. We have to be targeted and very precise. In the same way that we have codified disproportionate hurt, we can codify through lawmaking justice and equity. And so I thank you for endorsing the legislation, and we look forward to continue to advocate it, to see it included and passed.
Thank you.
Thank you. And I yield.
Thank you. The chairwoman now recognizes the gentlewoman from North Carolina's 12th district, Ms. Adams. You have 5 minutes for questions.
Thank you, Chairwoman Beatty. Thank you, Chairwoman Waters as well. You both have done an absolutely outstanding job. This is an issue that we've been dealing with here in my district. Let me ask my first question. The HEROES Act provided $1 billion in emergency appropriation to the CDFI fund, and it established a further set aside of either 25% of the remaining PPP funds or $10 billion for community financial institutions, including CDFIs and MDIs. As some of you have outlined, there are limitations to the PPP, to that program for our CDFIs and MDIs, namely that these banks or financial institutions are limited in their ability to lend based on their existing deposits or reserves. For example, in my state, one of our leading MDIs had to cap their PPP loans at $14 million. However, if this MDI and CDFI were able to receive a direct infusion of funding, they could continue to provide the assistance that was needed. I've introduced HR 7121 to address this issue that would provide $5 billion to CDFI's fund to set aside $2 billion for minority lending institutions. So, Mr. Kerrigan and Mr. Busby, could you please highlight the significance of greater CDFI and MDI participation in the PPP, and how could it impact minority and women-owned businesses?
Well, I'll go first, Ron, or okay. Critical. I mean, we saw that once, CDFIs were onboarded, additional dollars were provided, the difference that they made, in getting money, to those underserved businesses, to minority entrepreneurs. So it is a distribution channel that works. And again, CDFIs, it should not have been an afterthought. They should have been there from the beginning, just like fintechs and some of the other lenders, to make sure we had the broadest distribution channels possible. So very, very critical. And if we're going to do, another round, another tranche, or a phase 4 package, they definitely should be included, and funds should be re-upped because they made a huge difference.
Great, thank you. In response to the global financial crisis and the Great Recession of 2008, Congress established the State Small Business Credit Initiative, the SSBCI, in 2010 to provide $1.5 billion in funding for state and territory programs that support access to credit for small businesses. It's a temporary program, and it was administered by the Treasury Department. It expired in 2017. It provided awards to 47 states, 5 territories, DC, and municipalities in 3 states. Unfortunately, the expiration of the program has left a void in the marketplace for affordable small business loans. And Madam Chair, I'd like to enter 2 letters into the record from the North Carolina community banks.
Without objection.
Thank you. Ms. Castillo, Mr. Busby, how could reauthorization of the SSBCI help minority-owned businesses during this pandemic? And do your organization support the State Small Business Credit Initiative Renewal Act?
I will go first. This is Ron Busby, U.S. Black Chamber. I will say in our 2020 Black Print, we have somewhat outlined and addressed your bill specifically. I will also say that we believe that as many avenues that we can put access to capital in our states and local communities, we are in favor of that.
Right.
We feel like that as many options as we have available to us, especially our CDFIs and our Black-owned banks, we know that they make 70% of their loans to Black homeowners and Black businesses in local Black communities. That is the way we're going to have sustainability.
Okay. You got 45 seconds, so can our other speaker respond?
Yeah, I'm pretty much agree with what Ron said. I totally echo his words. I think putting more money on the CDFIs would really, really help. Thank you.
Thank you, Madam Chair. I'm going to yield back. Thank you.
The gentlewoman yields back. Now, the gentlewoman from Pennsylvania's 4th District, Ms. Dean, you have 5 minutes for questions.
Thank you, Madam Chairwoman. Can you hear me?
Yes, we can hear you.
I apologize. I've had some connection issues, but I'm delighted to be here. I thank you, Chairwoman Beatty, I want to thank the entire panel of witnesses for joining us virtually today to talk about access and equity for minority and women-owned businesses, specifically for helping inform us on how we move forward to support the American people as best we possibly can, not just during a pandemic and an economic crisis, but for the long haul. You know what, Ms. Beatty, since you allowed me to be a part of your subcommittee, I've taken my responsibility very seriously, and I had the chance to travel around my district meeting with minority and women-owned businesses and heard of some of the systemic barriers to them pre-pandemic. But in light of the pandemic, I've had the chance to follow up. Just yesterday, I visited 4 different minority-owned businesses and women-owned businesses in my area. And some of the common themes that you hear, beginning with when they were starting their businesses, not during a pandemic, but they had good, robust business plans, and the difficulty of getting adequate startup capital was one recurring theme. A second recurring theme during the pandemic has been access to capital as well. I know we've discussed a lot about PPP. In particular, I spoke yesterday with the woman who heads the Norristown Chamber, Kim Ramsey. She has her own business, and she talked about mentoring others, particularly during this pandemic, in terms of business plans, in terms of applications for relief, but also serious lack of capital support. So I would ask what I'm asking is a broad question for any member of the panel. I was wondering if you could speak to these often recognized systemic barriers. Some are systemic, some may be anecdotal, but many are systemic. And what actions we should take beyond PPP, what actions we should take to help ensure access to support systems. And I would open that to anyone who would care to begin to answer that.
Hi, thank you for the question, Congresswoman Dean. I think that we minority and women-owned businesses, myself, I'm certified as both, we need to be included in the management, distribution, and grant allocation of any funds that Congress allocate to the stimulus. Really get us involved, give us a seat at the table. I don't think the problem will be solved until Congress really engages us, engages Ron, engages the UHSCC, the MSNDC. You gotta have either an advisory council or just some kind of council that we're there with you, sharing the issues with you and helping you to write the right legislation, just to make sure it really goes to our communities.
I appreciate that. And I might ask this of the chamber president. One other issue that came up often as I visited businesses during COVID, that it's been exacerbated, is a bias by financial institutions in lending to women, in lending to minority businesses and enterprises. Can you speak to that, and how do we break down those biases?
Thank you. I'll answer that. I think, again, the access to capital is a concern by all minority, particularly Black-owned businesses, and the fastest growing sector of business owners in the country are Black women. And when you ask Black women their concerns, they will say, it is possible to get credit, yes, but they pay an exorbitant price for that credit. So it's more than just having monies go into banks and banks then make loans. It needs to also be affordable so that the same business owner that is a white man is paying the same rate based upon the same credit score and the same criteria as any minority, particularly Black or brown or woman-owned business. We have to make the barriers removed so that all of us can have access to it. It's already difficult enough to run a business, and when you don't have the funding to grow, to get through difficult times, it makes it that much more difficult.
And I'll, with your permission, Chairwoman, I'll pitch 2 bills that I have initiated. One is called Restore America's Main Street, which would be direct liquidity to businesses, not based on payroll, so that the business itself could understand and use that money where it is needed. And then the other is my NRSRO bill, which I'm very happy for the co-sponsorship of many on this committee to get access to other credit institutions. I see my time has expired. Thank you very much, Chairwoman, and thank you to our testifiers.
Thank you so much. The chair now recognizes the gentlewoman from Texas 29th District. Ms. Garcia, you have 5 minutes for questions.
Thank you, Madam Chair, and I too want to thank you for bringing this topic to the table that is so important, particularly during this time of crisis and knowing that so many small businesses are hurting and continue to hurt. And as most of our witnesses have said, unless they get help, they may not survive. I first want to associate myself with the history and comments from my colleague, my good friend from Houston, Congressman Green. I think making the MWBEs an independent federal agency is a step in the right direction, and obviously it's important to get those bootstraps. But I think the boot is important, and so I want to start with Mr. Busby. I thought that was a very creative way of illustrating what the dilemma is. And tell me, what does why does it matter that we get all those technical resources and the help that the small business needs? Not just the capital, but the assistance that can be provided in some of these centers.
Currently, there's over 2.6 million unemployed Black people in America today.
Right.
That's the bad news. The good news is there's 2.6 million African-American owned businesses today. If those 2.6 million businesses have access to capital, access to opportunity, then they hire Black people within their community. If that is done across the country, we don't have an unemployment conversation for Black people in America. That is a concern. As you grow the wealth of Black people, as a consumer, we're the best and biggest consumer in the country. As we earn dollars, as we grow our businesses, we spend our dollars within our local and state businesses. That is only going to boost the economy for America. So when you invest in Black-owned businesses, you are investing in ultimately.
Right. But I wanted to get to the illustration of the boot. I mean, what should the boot contain in terms of technical services to make sure that those businesses can thrive and grow? Because then obviously the community grows with it, and so does unemployment increase.
I think technical assistance is very important. Again, if you look at the majority of Black-owned businesses, they don't have continuing education. Thus, the majority of Black-owned businesses are doing less than $100,000. But those businesses that are doing continuing education, online training, they all are doing above $1 million. And so we have to invest in the opportunities for our businesses to have technical assistance. And that's coming out of the gate. That's not waiting until they have already established themselves. That is from starting your business all the way through the existence of that business. That's how they will continue to be able to grow and have sustainability.
Well,
that looks like.
Thank you. And Ms. Castillo, do you have anything to add to that and what that contain?
Thank you. Thank you. Yes, I do. Actually, we know that technology is here and is here for stay forever. And I totally agree with what Ron says. I think our community certainly need that education, because most of the business, like even if it's like a little mom and pop, like restaurant, they don't have computers. They don't know how to use a system. So I'm totally in agreement that our community does need.
Well, they also would need accountants and lawyers. I remember as a lawyer helping someone with their SBA, Section 8A.
Yeah, I think that a center of excellence to educate them on how to use the computer and how to complete an application and how to really run the business. That is crucial for our community. As we know, I'm sorry, please go ahead.
Ms. Kerrigan, do you have anything to add?
Well, I'll only say for the future startup activity and for entrepreneurship in general, that technical information is so critically important. Again, not only for existing businesses, because the world's changing every day and there's social media and it's a platform-based economy, you're going to need, those type of modern support and that ongoing support in order to navigate not only the pandemic, but also sort of this ever-changing economy. So it is vital. It's very, very vital. And again, young entrepreneurs particularly, and I think across the board, across demographics, say that access to technical information is not access to capital. Access to technical information is the number one thing that they need in order to start their businesses. They don't know where to go to. So yes, it is vital, very important.
Well, thank you. And I only have 1 second, and I just say, Ms. Ross, congratulations, and you go, girl.
Thank you.
With
Thank
that,
you
I
very
yield
much.
back. With that, I yield back.
Thank you
I'm out of
very
time.
much. The chair now recognizes the gentleman from Minnesota's 3rd Congressional District. Mr. Phillips, you have 5 minutes for questions.
Thank you, Madam Chair, and to our witnesses. And I think it's fair to say that the pandemic will surely precipitate the failure of far too many businesses. Mr. Busby already noted, I think 450,000 have already closed, and more are sure to follow suit. But prospectively, it's also going to present an opportunity for new businesses to be created once the pandemic passes. But just like so many of my colleagues have shared, including our witnesses, the hurdles to securing capital are terribly high and often too high for women and minority entrepreneurs. And that's the focus of my forthcoming efforts and also my questions. So starting with Ms. Castillo and Mr. Busby, I want to ask first about inspiration and then capitalization. First, how do we inspire, and are there any programs on which you're working or you're familiar to inspire young people to consider entrepreneurship and starting their own small businesses? I'd love to hear your thoughts on that and save some time for how we're going to capitalize them.
Yeah, thank you. Thank you so much, Representative Phillips, for the question. Actually, young kids now, they are very entrepreneurial. I think that technology has really helped to make them more entrepreneurial. And the reason why they can work from anywhere. They have these great ideas. And I really think that technology has really triggered that in those individuals. And also because it's just, the market is so tough. Jobs are difficult to get, and the pandemic certainly has accelerated that increase. So I think that young people are more motivated than ever to really start their own businesses for that, because especially if they are technological savvy, they can run a business just from like a very tiny cell phone. They can pretty much start an idea and run a business.
And Mr. Busby, are you seeing the same thing amongst your members and perhaps future generations?
Yeah, what we have done is we've partnered with the historically Black colleges and universities to create chambers of commerce on the university campus in the future, so that they get an entrepreneurial experience and education firsthand before they leave college. It's so often that many young people say, I want to start a business at 19 or 20 years old, but they don't have the experience or the exposure. They end up messing up their credit or their parents' credit. They end up messing up their name and an opportunity. We want those young people to partner with a mentor in an industry very similar to the idea, the concept that they have, so that they have a better chance of doing two things: long-term sustainability. What we've also seen is that many of our successful businesses don't have a succession plan. So you'll find businesses that have been in business 10, 20, 30 years and fall off the map because they haven't had anyone to pass it off to. And so we're asking many of our young people not to necessarily start a new business, but to go find an existing business where you can bring your talents and skills that you currently are just coming out of college or with college, bring that to some of our existing businesses and allow them to have sustainability, as well as allow you to be able to get into a business earlier and have a longer term of success.
Love that. And as our witnesses might know, and my colleagues, I've authored a bill called the New Business Preservation Act. It would form a $1.5 billion allocation through the Treasury Department to partner with states throughout the country to set up essentially investment funds focused on women-owned and minority-owned startups with a 1-to-1 matching component in which venture capitalists can be matched with these funds to provide capital to startups. Is that the kind of program and initiative that you, Ms. Castillo, and Mr. Busby in particular feel is necessary to inspire that type of new startup environment?
Absolutely, absolutely. I think that's a great idea. I think any fund, any way to get financing when you start your business is absolutely crucial. I support your idea 100%.
Wonderful. And Mr. Busby?
Yeah, I believe in the public-private partnership. What we're asking for from our corporate partners, if you have $100 million in assets, to take 15% of your assets that are sitting in a bank, invest those in a Black-owned bank, which then it turns around and invest in local Black-owned businesses. And lastly, as a president of a local chamber or United States Black Chamber, invest in us, because we then turn around and give the technical assistance, the access to capital, as well as the contract and relationship opportunity that many of our businesses lack.
And I love that because money without mentorship is like an engine without people. So thank you all for your time. I yield back, Madam Chair.
Thank you. The chairwoman now recognizes the gentleman from Illinois 4th District. Mr. Garcia, you have 5 minutes for questions.
Thank you, Madam Chair, for allowing me to participate in this such important hearing, and the ranking member Wagner for convening as well. And I represent a working class immigrant district in Chicago. Small businesses are everywhere in my community. Before the pandemic, if you just drove down two of the main retail corridors, you'd find restaurants, hardware stores, supermarkets owned by immigrants. But when the pandemic passes, I'm not sure what will still be there. Businesses are shut down temporarily in March, but more and more are announcing that they'll be closed for good. We need to act fast to fix that. First of all, our businesses need revenue. They need customers. The people in my community are worried about how they can pay the rent and pay their medical bills. If the Senate doesn't pass the HEROES Act and Congress doesn't do more to ensure that people can stay in their homes and meet their needs, then no amount of loans can save these businesses. Small and minority-owned businesses also need access to credit. Before the PPP program, there were not many SBA lenders who operated in my community. After PPP was launched, it was not easy for additional lenders to get approval to make loans under the program. We have talked a lot about how hard it was for minority-owned businesses to get credit in the early days of PPP, and in my community, this is a reason why. Ms. Castillo, do you think the small minority-owned lending institutions have built a better relationship with the Small Business Administration through the PPP program, or has the implementation of the program added new hurdles?
I think they have built a good relationship lately. I think since the program, when the program was implemented, didn't, but I think lately, yes.
Okay, good to hear that. Encouraging. Ms. Kerrigan?
I can't hear it.
This week, the SBA released data from about those who access loans from the PPP program. Unfortunately, the main revelation from this release is that the SBA needs to do a better job of collecting data on this program. How can we act in Congress and in our communities to encourage better data collection by the SBA so that we can understand who benefits from these programs? Ms. Kerrigan?
Unmute, please, Ms. Kerrigan.
There we go. I am unmuted. Yes, data is critical. And, it starts at the very beginning in terms of collecting that data in the application process. I know it was voluntary. It wasn't required. I don't know what the legal hurdles are in terms of making that required information, but we need to have that data in order to see who benefited and where we go moving forward. I mean, data drives decision making, and I think that would just help Congress do what they need to do to target the program better. So we're all about data, disclosure, transparency, and particularly when it comes to taxpayer dollars. So we fully support anything that we can do to get more data so that you all can make your decisions in a much more informed way.
any suggestions about what Congress can do to help produce that data on the part of SBA?
Well, I think the more that you ask, or hopefully the more that you will get. In terms of any of the demographic data or anything relative to race, I mean, there's things that were voluntary, right? So I think it would have to be an act of Congress that makes that mandatory, as part of legislation. Again, I mean, that's something we'd have to look into, but I think a lot of it was voluntary, not mandatory. And that being the case, you do not have the data, that you need at this point. So it'd probably have to be some type of act of Congress to make that happen.
Okay, thank you, Madam Chair. I yield back.
Thank you. The chair now recognizes the gentlewoman from the 45th District of California. Ms. Porter, you have 5 minutes for questions.
Thank you so much, Madam Chair. As the only single mom in Congress with young kids, and as a person who's working from home as much as I can, I know that single moms are being asked to do the impossible right now. This isn't new, but the pandemic is certainly making it so much worse. Ms. Kerrigan, pre-COVID-19, what were the margins like for a normal small business, say a bakery owned and managed by a single mom who has 2 or 3 employees? What were those profit margins like?
Thin, thin, thin.
And that was back.
Thin. I mean, really, on a day-to-day, I mean, literally, yes, very thin.
And that was back in normal times.
That's
so
right.
What would happen if this bakery saw the price of flour double?
That's right. I mean, it was just an enormous impact, not only in terms of prices going up, but demand going down, right?
And what if the price of eggs were to triple? What would that do to the profit margins?
It would probably wipe many of them out. Profit, sugar, any of the inputs that you're using in that bakery, you're really carefully monitoring those expenses, right?
What about the cost of childcare quadrupling, the childcare that allows that bakery owner to come to work every day and bake? What does that do to the business?
It would probably kill the business because it would be impossible to do that, right? I mean, yes, very, very difficult.
And that's what is happening, by the way, when people have to go from paying, for example, for after-school childcare to full-time childcare. It causes one of the inputs of your business, which is the ability of the owner-operator or the employees to go to work, to essentially quadruple. And what we're seeing right now is all of that is happening at the same time that the number of customers is dropping, and that's going to push these businesses into the red. Do you think that this childcare crisis is a crisis for our small business community?
Oh, absolutely. The Small Business Roundtable and Facebook did a survey, the State of Small Business Report, and that was one of the biggest pressure points that they found, was just sort of the enormous pressure that was being put on entrepreneurs, particularly women entrepreneurs, to juggle both. So absolutely, it's a crisis for working women and entrepreneurs, both.
And working parents, but it falls particularly hard on those businesses with the thinnest margins, which often are women-owned and minority-owned companies, sort of micro businesses. And those very thin margins, just like they can't absorb a price shock of 4 times the cost of inputs like flour, they can't afford what is in essence a 4 times price shock in the cost of their own ability to contribute to that business, to put in the sweat equity by having to find childcare. Do women business owners have easy access to capital to help them get through these tough times? Are you aware of anyone making loans to women business owners or to working parent business owners so that they can pay for the cost of childcare?
No. No, I mean, the women entrepreneurs or business owners who have been able to get a PPP loan, have done so because of the relationship they may have had established with the bank. And so they had a commercial relationship, which is very few, and then through fintech lenders. But if you're asking specifically and directly for childcare, no.
So there's no assistance, no program. Can you use PPP funds to pay for childcare for your employees, to provide that, for example, to them?
No, it's not a forgivable expense.
Do you think the economy can fully recover if working parents, and particularly single parents, are trying to be full-time parents, assisting with emergency distance learning, and work full-time in their businesses to deal with all of the adjustments and struggles and changes that coronavirus survives? Can we have a full economic recovery in that kind of environment?
It's very difficult, right? I mean, it's very difficult to juggle two. Not everything can be done out of the home in terms of a business, but even if you're in the home working in a business, if you're a home-based business, you have also the responsibility of educating your kids if they're not going back to school, it'd be extremely, extremely difficult. Absolutely. No, it would be very difficult to get back to full economic recovery, back to quote unquote normal with that scenario.
So would you agree that we ought to be thinking about supports for childcare and helping businesses deal with these and employees deal with these costs of childcare as part of how we think about economic recovery? They are hand in glove issues.
I do. I mean, just as we looked at PPP in terms of forgivable loans for, say, health, both payroll and healthcare expenses, yes, I think we need to have some very creative solutions because you're right. We cannot get back to full economic recovery without having that addressed. I agree with you. I look forward to maybe working with you to see what we can do, to make that happen.
Thank you so much, and I yield back.
Thank you so much. I would like to thank all of the members for their questions, and certainly I would like to thank all of the witnesses for their testimony, Mr. Busby, Ms. Castillo, Ms. Kerrigan, and Ms. Ross. Without objection, all members will have 5 legislative days in which to submit additional written questions for the witnesses to the chair, which will be forwarded to the witnesses for their response. I ask our witnesses to please respond as promptly as you are able. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the records. I remind members to submit written questions and materials for the record to the email address provided to your staff. Without objection, I am submitting a statement from the Asian American Pacific Islander Chamber of Commerce and Entrepreneurship, a statement from Clever Girl Finance, a statement from Fund Humanity, a statement from Include Ventures, and a statement from the National Bankers Association for inclusion into the records. The hearing is now adjourned.
Thank you.